Okay, so let's get started here. Thanks for joining, everybody. My name is Fiona Sanapelli with Design Manager and Design Spec. And today we have with us Priya Srinivasan from Numbers for Design MN. This is a boutique accounting firm that deals only with interior designers. They understand the unique workflows and challenges the design industry has, and they've built their services to match that. They've been around for about 15 plus years, based in Minnesota, and they do everything from day-to-day bookkeeping to high-level financial strategy. Priya is also one of the friendliest accountants I've ever dealt with. So we're really happy to have her here with us today. Thanks for joining. So a couple quick things. This is going to be part presentation by Priya, but we're going to have a lot of time for open questions in a forum. So please put your questions into the chat or the Q&A box, and we'll take breaks throughout her presentation to address your questions. If we miss anything, any questions during the talk, we'll address them at the very end. And we'll also send out a recording in a follow-up email to everybody in case you want to watch this again. So I think that covers everything to get started. So Priya, I'll hand it over to you, and thanks for being here.
Thank you, Fiona. I appreciate it. Good afternoon, everybody. Hope everybody is doing well. Thank you for joining this session today. As Fiona mentioned, I own Numbers for Design Minnesota. We are a boutique CPA firm that serves as trusted business advisors for interior designers. And as she said, I've been doing this for 15 plus years, so I've seen some interesting things during my career here. Interior designers, just like other business owners, want to know a lot about their money, right? They want to understand the financial aspects of the business. They want to find out about sales tax compliance. They want to know whether they should take a salary or not. And the question I get asked the most is, I see the profit in the books, Priya, where's my money? So I get asked questions like this, and I think I tell people who ask me these questions, consult with a business advisor. Because as trusted business advisors, we will tell you, we'll give you advice based on your size of the business and your stage of the business, right? What works for one designer might not work for another designer. And our job is to tell you things that will work for you. So today we are going to go through some basic accounting concepts in interior design. I'll start with the why. Okay, why is accounting important? If you want to make money, you have to follow the money. Accounting is the way you follow the money. So as simple as that, right? Accounting tells you what is the source of your revenue. Where are you making your money? It tells you what are you spending on your expenses. If you ever want to borrow money or sell your business, what's the first thing the banker asks you? Show me your tax return. Show me your financials, right? So those documents are prepared from your books. So it's based on accounting. I cannot emphasize how important accounting is for the accuracy of those documents. I'll give you an example. So we had a client come in, I would say maybe 3 months ago, and said, okay, we need some bookkeeping help. Can you help us with this? And I said, okay, sure. We'll take a look at your books and we'll let you know. They had done 2024. 2024 was fully done. Their tax return was filed. Everything was completed. And they said, I only need help with 2025. I said, okay, let's take a look at your books. So one of the first things we do as accountants, right? We look at opening balances. So 1/1/2025, what was your cash balance, right? What was the balance you had in your bank account? So that was our starting point. Because I'm doing 2025, I have to start there. And I asked for a copy of his tax return, and I used that tax return and compared it with his actual bank statement, right? The bank statement as of 1/1/2025 has a number. The tax return as of December 31st, 2024 has a number. Technically, those two should tie because December 31st is the last day and January 1st is the first day. And when we looked at it, the numbers were off by $50,000. And we were like, okay, this doesn't look right. Let's go dig. Maybe he had checks worth $50,000 that somebody didn't deposit in the bank. When we went and looked at it, there was no unclear checks, so that was not causing the error. So we started digging a little deeper. And then when we went into his accounting software, what we found was they had their point of sale system connected and they had the bank connected. So income was doubled up. So over 2 years, 23 and 24, his revenue was overstated by $50,000. So even if I say he's in the 20% tax bracket, just for the federal income taxes, he's paid 10,000 more in taxes. That's not a small sum of money. So we were like, okay, client, I think you need to go amend last year's return. So this is the main reason why accounting is so important, right? The tax return preparer who did the tax return the previous year did not look at the books to see they were right. They just took the profit and loss statement from the software and put it in the tax return. Nobody did their due diligence to see if the numbers were accurate. The owner of the company did not know enough or did not consult an accountant or a bookkeeper to make sure numbers are right. So it is for reasons like this, accounting is important and has to be followed. If you ever want to buy a new software, I want to hire that expediter who I so badly need. Do I have money to do that? How do I know that? I have to look at my financials. I have to compare this year and last year. Do I look at my cash balance? Do I have enough to meet my regular operations and support this new additional expediter? How do I know all this? Through accounting. And the other thing is you will be able to see all your bills, pay your bills on time, avoid late fees, avoid penalties. And I think the most important reason I think I would do this is to show my end clients I'm credible, right? If I have a client, the client gives me a client deposit of $100,000, I need to make sure that $100,000 is accounted for, and I give her an accounting that how I use that money for purchasing the various items, for the design fees, right? If my invoices to her don't show the number, or instead of 100,000, it shows 99,900, or it shows $101,000, that's not correct. That tells me to the client, it's showing that I am not doing my accounting right, and it reduces your reliability with them, right? So to make sure your end clients give you more business and know that you're dealing with the money correctly, accounting is important. One more example we saw with a design client is they were entering all the purchase orders, making 100% deposit payments on the purchase orders, right? But never ever recording vendor invoices. So what happens in a software like Design Manager? If you don't record a vendor invoice, you do not get to take the deduction in your profit and loss statement or in your tax return. So in Design Manager, cost gets recorded when you create a client invoice. So if you do not create a vendor invoice, Design Manager thinks all the money you got from the client for selling furniture is income and there is no cost recorded. So this actually happened in a design client where they were paying 100% deposit on the POs. Vendor invoices were never created on the system. The vendor did not ask for the money because they got 100% deposit on the POs. Nobody went and looked into Design Manager to see a cost of goods accrual report, which is one of the reports Design Manager produces to see if the cost is recorded. Nobody looked at those reports. So the client ended up having a huge profit, and nobody questioned why did they have that huge profit. Somebody should have asked, right? My gross profit ratio is about 30%. Why is the number showing up as 50%? So we ended up going again. This was somebody who came to us new. We went back, amended last 2 years, recorded all the expenses, and filed new tax returns, right? So this has got implications to the owner, to the business, to the cash flow. So even though accounting is like one of the, like I have clients who tell me, oh, I'm not doing too well, Priya, maybe we'll skip bookkeeping for a few months. To me, that's the biggest mistake. Bookkeeping has to be done consistently when you're doing well and when you're not doing well. Only then you'll know your actual expenses are getting recorded. So moving on, we're going to talk about, okay, the slides are here, but I'm going to talk about the concepts. I'm not going to reference the slides, so just an FYI to everybody. We're going to talk about methods of accounting. And there is, yeah. Okay. The two major methods of accounting are cash basis of accounting and accrual basis of accounting. The method of accounting for interior designers affects your sales tax. It affects your income tax. So it is important for everyone to understand this. Okay. Let me give you an example. I raised an invoice today for a sofa which I delivered to the client last week. Okay. The invoice is $2,000, living room sofa, $2,000. You create the invoice, you send it out to the client. In accrual basis of accounting, I raise the invoice today. So whether the client pays the invoice or not, that $2,000 is counted as income in your profit and loss statement today. Okay, that's accrual basis of accounting, where income is counted when the invoices are created or the vendor expenses are created. It does not have to actually go out of your bank account or credit card. Cash basis on the accounting, cash basis of accounting on the other hand, same example. You create the invoice for $2,000, send it to your client. The client pays you November 2nd. So they don't pay October. She's on vacation. She didn't even look at your invoice. She comes back from vacation. November 2nd, she says, hey, Priya, here. She writes you a check and gives it to you. So the money hits your bank account on November 3rd. In cash basis of accounting, nothing is recorded in October. If you go look at your profit and loss statement, the $2,000 will not be there. In accrual basis of accounting, the $2,000 will be there. In cash basis of accounting, in November, when you actually receive the money, the $2,000 is counted as income. In accrual basis of accounting, nothing is recorded because we already recorded it in October. So this concept, I think, is important to understand. Having a software based on accrual basis of accounting is, I think, helpful in decision making, right? What if the small workroom that makes the pillows so beautifully, she handwrites her invoices because she's a small small shop, and she sends it by mail, and since she does her own bookkeeping, her invoices are always late. So if I look at my she delivered the pillow in December and didn't send her invoice till February of next year, right? So we have the pillow, we'll bill the client for the pillow, but because I don't have a vendor invoice, I don't record it in the system. And so in cash basis of accounting, it looks as if I don't have any expense. Whereas in accrual basis of accounting, it'll say, yes, I have a vendor invoice pending from the workroom, right? So accrual basis of accounting gives you a true accounting of all income and expenses. Whereas the cash basis of accounting is simple. It's like your bank statement. If I look at my bank statement and look at all the revenue that comes in and all the expenses that goes out, do not count transfers from your personal account or loans, but just actual revenue and actual expenses. That's your cash basis P&L. So the method of accounting is going to affect your income tax, right? So we had this client where they had They had this huge project where they got about maybe $600,000-$700,000 of deposit. They gave the proposal in March, but obviously the end client needed some time to think about it. So they decided on December 1st to proceed. And they came to and said, here's the check for $750,000. Let's proceed with this project. Okay, so if this interior designer is on cash basis of accounting, right? She got 750,000 just of client deposit money. So it's not income, it's just gross receipts. But on cash basis of accounting, that whole 750 will be counted as income, right? And she got it in December. Imagine you wouldn't have paid taxes on it till December. Suddenly in December, your income tax liability will triple up because you suddenly got $750,000 in revenue and you will owe taxes on it at the end of the financial year in December. So for things like that, the cash basis of accounting is not really good. On the other hand, the accrual basis of accounting is good for income tax, but you'll end up paying tax on AR, right? What is accrual basis of accounting? I just said that even when I raise the invoice, it's counted as income. So as on December 31st, I might have $100,000 of income in my books, but the client hasn't paid it. The client is going to pay it in January or February. But I, as the interior designer, will have to count that 100,000 as income on accrual basis of accounting, and I have to front the income tax on it. So even though the money hasn't hit my bank account, I have to pay the income tax on it. So the method of accounting you choose is critical, and you want to make sure you choose something that works for you. It also affects sales tax because states have different sales tax rules, right? And some states say you have to use the method of accounting used for your books of account. So if you use a software like Design Manager, which is accrual basis of accounting, you have to use accrual basis for sales tax in filing in your state. You cannot use cash basis. So again, so the method of accounting, understanding what method of accounting cash basis is, accrual basis is, what are you using in the business? How is it affecting your sales tax? How is it affecting your income tax? Things to ponder about and know. Fiona, can we stop for questions?
Yes, and you may have covered this already. If you recognize the income in accrual, how and when do you recognize the actual cash?
Yeah. So when the income is recognized in accrual, so the same $2,000 so far, right? So I created that invoice in October. So in October, I will count it as income, and I'll create a accounts receivable. So it's in the income statement, it's in the profit and loss statement, but in the balance sheet, I'll say, that $2,000, I have not collected it. So when the money comes in, hits the AR account, which is a balance sheet account. It does not affect your income statement account. Does
Okay.
that answer the question?
Let's see if they have a follow-up question.
So when the cash actually comes in, it does not affect your P&L. There's no double counting, right? When you created the invoice, there is an accounting journal entry that gets made in the back end, which is basically crediting income. So income is revenue, and there is something called accounts receivable, which is created. So when the cash comes in, only accounts receivable gets adjusted. The income statement does not get touched.
Okay, and then what about partial payments?
It'll be the same way. So if so the $2,000 invoice, same example, right? In October, I raise an invoice for $2,000. The client says, for whatever reason, I can only pay $1,000 now, right? If she pays the $1,000 now, on accrual basis, if you're following accrual basis, the whole 2,000 is income this year, right? Because you're accrual. The minute you raise an invoice, it's counted as income. But if you're following cash basis, only that 1,000 will be income. Whatever she pays next year will be income next year. If you're following accrual basis of accounting, partial payments doesn't matter. You're following accrual basis. Whether the client pays, does not pay. See, that's the other thing. So the client might say, for whatever reason, I'm not going to pay this invoice. You've already counted as an income. You've already paid income tax on it. You've already paid sales tax on it. And then next year, you have to create a bad debt. Say that I raised this invoice last year. The client refused to pay it. So I'm going to claim a bad debt, meaning an invoice was not received expense. And the thing with that is some states don't let you file negative sales tax returns. So hopefully you have other income in the state and you can offset. But if it's a state you're going into for the first time and you filed a return last year on accrual basis, and this year the client is done, there's no more action going on in that state, you cannot file a negative. You're basically stuck with the loss. So you would have ended up paying the sales tax and you can get a refund. So some states have that it's not all states. Again, states vary drastically on sales tax rules, how it's done. So some states have that. So it's unfortunate, but it's something to think about and deal with, right? So being aware, knowledge helps, right? So you can plan for these things.
Okay, great. And I don't see any other questions right now, so I think you can just keep going.
Okay, wonderful. So we talked about methods of accounting. We're going to talk about what to look at in your financial statements. So these are the main things I think as a business owner, project manager, someone who's responsible for project profitability. If I was in that position, I would look at all these reports, right? So balance sheet. What is a balance sheet? A balance sheet just shows what you own, right? Assets. So my equipment, my cash balance, my furniture and fixtures, I own all that, right? Against what I owe. So whatever you owe to the credit card company, whatever you owe as client deposits, whatever you owe on long-term loans. So it compares what you own to what you owe, and the difference is equity. So what is equity? It's my stake in the company. Today, if I want to sell my company, I will look at my equity section and say, what is that number? Is that a positive number? Because today, if I sell, I have to pay all the people I owe money. I can collect all the people who owe me money, right? And the net effect is basically what I can take home for myself. So balance sheet is important to look at, to know that, right? Just like I said in the other example, the AR and the AP, right? If I look at just the income statement, I just know what's happening now. But if I look at the balance sheet, I'll know why the cash is off, right? If I have a profit of $10,000 in my accrual basis balance sheet, but my cash balance is only $2,000, then you're like, why? And then you'll realize the profit is 10,000, but that includes accounts receivable, which is sitting in the balance sheet. So it'll show you your accounts receivable and accounts payable. It'll show you vendor deposits and client deposits, right? It'll show you your work in progress. All that is part of the balance sheet. Income statement, on the other hand, it shows you money coming in based on your methods of accounting, right? Accrual basis or cash basis for the revenue you generate. So it shows income. It shows cost of goods sold. Cost of goods sold is cost directly related to the sales. So if I buy a furniture for $1,000, right? And the cost of the furniture is $600, right? 1,000 is my sale of furniture number. 600 should be in my cost of goods sold number. 1,000 minus 600, $400 is my gross profit. So the gross profit will change based on revenue. So it's important to allocate cost directly related to the sales as cost of goods sold, because that gross profit number is good to monitor. You can see gross profit numbers year over a period of time and see if you're maintaining gross profit. And gross profits are similar to markups, right? Markup is on cost, gross profit is on the sales number, that's all. So you can see if you're marking up your goods enough to cover your overheads. And you also have operating expenses after gross profit, which are those expenses you need for your operations. And those typically don't change based on revenue, right? If I sell more, my rent is going to be the same. The rent doesn't increase just because I'm selling more, right? Your software fees might be the same, right? So those kind of expenses that don't change if the revenue changes are called fixed recurring expenses, and they are part of your operating expense. And gross profit minus operating expenses gives you your net profit. Cash flow statement, that's the other one I look at. Just like I said, my accrual profit shows 100,000. Where's my money? It's not in the bank account. The bank account doesn't have $100,000. That's because the 100,000 was used to pay back a loan. The loan is not part of my P&L profit and loss statement. The 100,000 includes accounts receivable of 50,000. Client B owes me $50,000. That was counted as income in my P&L statement because I'm a accrual basis taxpayer, but I don't have the money in the bank because she hasn't paid us yet. So the cash flow statement will show you the movement of cash. It will show the money coming in, money going out, and it include all activities. Like the income statement is only operating activities. The cash flow will also show like, oh, I used 50,000 of the money in my bank to pay off a loan. The loan payment is not an expense. It's just a cash flow. Only the interest on the loan will come in your P&L statement. Project profitability. So am I marking up my product furniture enough to make a profit, right? How do I even know that? Or you have to look at the project profitability report, which is one of the reports in Design Manager. And you can see also, is one client making so much profit that another client where you're not making profit, and it's kind of balancing each other out. So your project profitability report will show you all the details so you can know, oh my God, we are not making money on this and we are making a lot of money on this, right? So you can be okay if that particular client where you're making a profit comes with another project, you willingly take it, right? But if this client where you're not making a profit because she's very sensitive on pricing, right, comes back, maybe you can reconsider, right? Because all her projects are going to be very similar in that way. Accounts receivable and accounts payable. We talked about this, right? If somebody owes you money or you owe somebody else money, right? The workroom that didn't submit their bill because of which your profit looks high. No, you owe the money. It's sitting in accounts payable. You just have to pay it. Gross profit margins. So look at your gross profit margins year over year by project, see what is in there. Work in progress. This again is a very this is a concept that's very specific to interior designs and design accounting. What is work in progress? Exactly what the term says, right? Work in progress. Work I have started but not completed. Why is that even critical? Because work in progress in a software like Design Manager refers to all those items for which I have a vendor invoice. So the vendor has billed me, but I haven't billed the client back. So I really want to track that and bill the client back because that's money in the door, right? I want to, wherever there's cash coming in, I want to pay special attention to it. If I look at this work in progress report, I know I've paid, I have a vendor invoice for Francis King, and they had this furniture which I delivered to the client. I want to make sure I bill that client for the same amount of money so I can improve my cash flow, right? My cash flow will be good if I'm collecting money in advance at proposal time equal to 75% or more of the project cost, and also I'm billing on time. You don't want to send this bill 4 months late, 5 months late. You want to send it when the project is delivered so that when you pay the vendor, you're at the same time collecting money from the client, so your cash flow is good. Give me a minute. So these reports will help you understand what where in your business things are not going well. That's why these things, Design Manager is a software, any of these reports can be printed with a click of the button, right? As long as your data entry is correct, which is also critical. If the data entry is not correct, these reports will not show you the correct data. But if the data entry is correct, you look at these reports, you're able to make some very keen observations on your business. I told you cash flow is where that shows the inflows and outflows of the business, right? Cash is king, profit is not equal to cash. This is the example I told you where the books show a profit, but that's not in my bank account because it's sitting in AR. And the other thing, the thing as accountants, we think is important to do is reconciling your bank and credit card statements. What is reconciliation? So the reconciliation is basically a process where we compare what is there in the books with an outside statement. In the first example, remember I told you the first step we did was we looked at the opening balance in 2025 for that client, and we compared it with the bank statement. That bank statement is an outside proof document, right? I didn't create that document. The bank is creating that document. So the validity of that is a lot higher than what I see in Design Manager, because I could have made a data entry error and typed a 60 as a 600, or I could have posted it to the wrong account. So many things could have happened, right? But that external document from the bank exactly shows what's there in my bank. So comparing that balance with your Design Manager balance will help you understand, oh, this is all correct. The only thing outstanding is this check that didn't clear, somebody didn't take it to the bank. Or it's a studio pay transaction, a design pay transaction that money came in, but it's going to hit our bank account in 2 days. So things like that, you're able to notice if you reconcile your bank account monthly. Accounting is a very time-bound function, unfortunately. All of us have busy lives. It's difficult to remember things, and you don't want to remember things. Why did I spend $200 on Amazon last month? It's something you really don't want to remember, at least in my view. So for things like that, if you record it in your software, then the software will do everything else, right? You don't have to remember. Save the receipt, record it in the software, and then you don't have to worry about it. Okay, I'm going to go to interior design concepts. Are we good with questions, Fiona?
No, we're good right now.
Okay. Okay. Client deposits. So these are concepts which are very specific to design, as I told you. So what's a client deposit? So client deposit is advance payment, right? It's a deposit. Client gives you money in advance. At the time you do a proposal, you say, please give me 75% of the cost of this sofa before I'll start any work. So you have a letter of agreement or a contract, they sign off on it, then you send them a proposal, they say, okay, proceed with buying the couch for my living room. The cost is 2,000. You tell the client, I need 50%, 75%, whatever your percentage in your business is. I've seen deposits as low as 50% and as high as 100%. So there are some interior design clients who say that you have to give me the full price ahead before I start my work. So that payment in advance by the end client to you as an interior designer is client deposits. The one thing you have to remember is at this stage, when a proposal is issued, right, no work is done. You've just started, maybe you have pricing done. So you've gotten pricing done, you've created a spec in Design Manager, you've put the price as $2,000, you've put the client deposit as $1,000, you've sent it out to the client, but there's nothing physical being created yet, right? The sofa by itself is not done. So the money they give you, the client gives you that $1,000, 50% of $2,000, half of $2,000 as a deposit. That to you is a liability. So you might say that deposits are non-refundable in your original contract, but in the accounting world, that $1,000 you haven't delivered the sofa to the client, right? But you have $1,000 is money received in advance for the client from the client, and hence it's a liability in your balance sheet. So this client deposit, if you are following accrual basis of accounting, will go to the balance sheet as a liability, as something you owe the client, right? And it will sit there. So it will not come in as income. Whereas in the cash basis of accounting, that client deposit of $1,000 will be counted as income, even though your income is not 1,000. You'll have to pay the vendor some money, right? But the $1,000 will be counted as income in the year it's received. So that's client deposit. Vendor deposit, exactly the opposite, right? The client pays you, and then you go to the sofa vendor and say, hey vendor, make the sofa for my client. I want it in this color, I want it in this configuration, I want leather, I want pillows, I want trim. You tell them all that. And the vendor says, okay, that is going to cost you $1,500, and you have to give me 50%. You have to give me $750 as a vendor deposit for me to start the work. So you will pay the vendor $750, and you will send a purchase order to them and say, hey vendor, these are the specifications, this is the money, go start the work. So that vendor deposit is an asset. You own it, right? Because the vendor has to make the sofa for you. If he doesn't make the sofa for you, he has to return that $750 to you. So that is an asset, or you own that vendor deposit. So that again, in the accrual basis of accounting, will go in the balance sheet as an asset. In the cash basis of accounting, it'll go in an expense. So you'll get to take it off as an expense in the year you pay it, not in the year the sofa is completed. Work in progress is work in progress, like I said. So these are items for which you've issued a purchase order, you've sent the PO to the vendor, you've issued a vendor deposit to the vendor. The vendor has partially or completed it or almost on the verge of completing it, and he sends you a vendor invoice. So at that stage, it's called work in progress because it's almost complete. He's sending you the vendor invoice. And like I said, the work in progress report in Design Manager will show all the items for which you have vendor invoices, but you haven't billed the client. Open purchase orders. So open purchase orders is basically purchase orders for which we don't have vendor invoices. And that again, all these reports help track money. And while it's a lot of data and a lot of detail, I would say break it down into small pieces and do like 1 week, just look at vendor deposits and work in progress. Next week, look at open purchase order and cost of goods sold accrual. It's important to look at them. External accountants, bookkeepers, tax preparers, they are all consultants. They help your business as much as they can, but it's ultimately your business and your money. So I tell clients, you have to care about the money, right? Only then you're able to look at the accounting and you're able to see all the numbers. Open purchase orders are important because if I send a purchase order and the vendor never sent an invoice, right, for whatever reason, It's not going to show up in my WIP report. I wouldn't know to bill the client. But I've already sent a purchase order and vendor deposit. So it'll show up in my open vendor deposit report. So open purchase orders is very important to look at because there are things that get stuck in there. So you want to call the vendor and say, hey, vendor, send me the vendor invoice so I can record it in my system so I can bill my client. Even if they don't want the money, you want it because you want to bill your client. Cost of goods sold accrual is one of the reports in Design Manager that will help you find things for which you haven't recorded costs. Like the example I told you at the beginning, where we had purchase orders with 100% deposit and no vendor invoice ever created, this report will show it. So looking at these reports will help identify gaps in project profitability. So Design Manager as a software addresses many of these. So if you look here, you have a client invoice image and you have a payment option to send the client the invoice by through Design Manager and get paid through Design Manager. And also the reporting, it's an accrual-based system. QuickBooks, on the other hand, you can be cash or accrual, right? Design Manager is accrual-based, and I talked about differences between cash and accrual. All these multiple reports to look at are very easily available in Design Manager to look at. And it's got all these functions. So if you, there are also other softwares, right, where it's front end and the accounting is through QuickBooks. So having an integrated system helps with a lot of these things because then your purchase order and your vendor payments are all in the same system and you don't have issues where data transfer doesn't happen between the two systems. Are we good with questions, Fiona? The sales tax is the last piece, and I see it's 145.
Yeah, we're good so far. Thank you.
Okay, wonderful. So sales tax, like I said, sales tax in interior design, unfortunately, is a very, very integral part of interior design accounting, right? When you sell furniture, most states, I mean, unless you're a state with no sales tax, most states will tax furniture. The difference between furniture and something that's affixed to a home is important to pay attention to. So like install carpet, faux finishes, painting, cabinets. So those things are called real property improvements. And for most states, they're taxed differently than furnishings. So you just want to be aware of that because there's a component called use tax in there. Design fees may or may not be taxable. Freight may or may not be taxable. So totally depends on the state. I would strongly recommend looking up the sales tax rules in your state. And the other thing to pay attention to is when you go to a new state, which I see a lot of designers are doing, which is a great thing. If you're selling furniture, most likely you will have to register and file in the state. So if you have a warehouse where the furniture is stored, it will create physical nexus, and which means you have to register and file in the state. They have things called economic nexus, which basically say if you don't hit a certain level of revenue, like 100,000 in sales or 200 individual transactions, you don't have to register there. But that only applies if you're not physically in the state. If you're physically in the state where you have a warehouse and you have a piece of furniture in the state, most likely than not, you have physical nexus and you will have to file sales tax. So in conclusion, I would say have a bookkeeper, ask them questions, look at your financials. If something doesn't make sense to you as an owner of a company, as a project manager, ask, because I think the most successful clients I've seen have always asked what they didn't understand in the numbers, and that has helped them understand more, right? And they are able to follow the numbers, ask the right questions, track gross profit. Um, Obviously, sales tax has to be paid. If you have cash flow issues, put that in a separate bank account so it's not does not get used. Um, Compare year to year. Look for trends. Some of these things will help you start doing it small. I tell clients, do a finance Friday, spend half an hour, try to understand these numbers, ask questions of your bookkeeper, ask questions from ask your tax preparer questions. The more you ask, the better you will be equipped, and then you will be able to understand your financials. Thank you, Fiona. Thank you, everybody.
I do have a question here.
Yeah.
How do you handle the taxes when there is tax applied to procurement? We are trying to separate what we consider taxable procurement taxable procurement tasks and non-taxable procurement in California.
So when tax is applied at the time of purchase, right? Um, you will have to, unfortunately, in Design Manager, there's a way to do it, right? You can separate it out as a separate component and enter it. So you'll enter the cost separately, you'll enter the tax separately, then you enter the markup separately on the item. So the first two will be non-taxable, only the markup will be taxable. I don't know if that was what you asked, but there's a way to do that in Design Manager. Let me see your question here. How do you handle the taxes when tax is applied to the procurement? So it's part of your cost. If you're asking what, it'll be part of your cost in the spec. So when you pay it, it's part of cost of goods sold. And you can get it reimbursed from your end client if it is the same county. So if the tax that's collected is the same as the tax that would have been paid by you when you sell it, then you're good. So you don't have to tax that product again. Only your markup needs to be taxed.
Okay, thank you very much. Someone else is asking if your services include business consulting. If they don't need accounting but would love your insight on how to grow financially, is that something you offer?
Definitely. Yeah, we do. Like I said, we do the full spectrum. So yes.
Great, okay. Have a couple people here saying this was really helpful and thank you. Someone's asking if you've noticed any trends in the profitability for interior designers lately.
Um, I've seen clients all over the spectrum here. So I have a group of clients who are doing extremely well. And then I have another group of clients who are not doing so well this year. So it's hard for me to tell. I know there are some who are like, I think the project started maybe in July and they go on till next May or June. And it's like huge expansion projects for second home, third home, that kind of renovations.
Does it tend to be designers who have repeat clients that do really well?
Yeah, exactly. These are all clients who they've got yes, exactly. So they did the first home and then they come back after 10 years for the second or third home.
Hmm. Yeah, and you already know how to work with the
Exactly.
person and they trust you. That's always really nice.
And it's always nice when they come back to you, right? I mean, I mean, it's no marketing and you have a client in the door.
Yeah. Oh, do you mind going to your page that shows your email address? So we have some contact info for Priya here, if anyone wants to take a screenshot, and I will send this out with the follow-up email. And then we also have a page, the following page shows some contact info for Design Manager. This is the salesperson, if you have any questions about, maybe using the software. And you can go back now to your slide with your contact info. So we have one other question here. What is better for designers and procurement, design spec or design manager? So, yeah, the two companies were sort of sister companies. We're owned by the same group. We were not developed, by the same people or at the same time. So design manager has been around for like 30 years. Design spec's a little newer. Um, Design manager was created for accounting, specifically like interior design accounting. So if you're doing a lot of procurement in your firm, and you require, essentially QuickBooks in a platform, like you need to be able to send and create a lot of invoices, accept payments from clients and track them. That kind of thing is really great for Design Manager. And then Design Spec was initially designed as like really robust spec writing for complex projects like hospitality and commercial. Um, so over the years, we've added procurement or purchasing features to Design Spec. So you can take all those specs you created, get request quotes from vendors, have those auto-populate in the system. You can create purchase orders through Design Spec, a lot of budgeting tools. And there's also an integration with QuickBooks. So Design Spec is not as robust. It's not like the full gamut of accounting features that you might need if you are doing a lot of procurement. But if you're primarily building like projects with a lot of specs, maybe something more complex, we'd recommend Design Spec for that. Okay, let's see if we have any other questions. And yes, I will send out the recording of this, and you can share it with any other team members. It says, where would you recommend, I guess, training in Design Manager? I think that's what they're saying. So,
Yeah, I think Design Manager has a YouTube channel, if I remember right, and I think it's been updated frequently.
yes, there's a lot of like there's an account manager who can help you. So if you're doing like really complex um projects in Design Manager, try to make sure to have someone like Priya help you, at least at tax time or throughout the year. So you could probably do some of the training with them. But there's also like complimentary training in-house when you get started on the software. And then does Design Spec have pictures too? Yes, you can upload a lot of images to your specs. You can link, if you like have a sofa and you're linking a few upholstery fabrics or you're linking like a wood finish to it, you can have thumbnails of all of those all on the same page. And you can have a few images of the same item all on the same page. So I'll put, so right here on the screen, you can see the link to Priya's website. It's n4dmn.com. And then in here, I'm going to put, maybe you could go to the next
Yep,
slide.
yep.
So, and then in the Q&A, I just put the link to Design Spec and Design Manager. So it's just designmanager.com or designspec.com. Okay, question for you, Priya. What advice would you give to a design studio that currently only sells their time but wants to consider taking on procurement to increase profitability?
Uh, yeah, I think the money is in procurement, but what advice for what aspect are you talking about? Software? Are you talking about and
I
I'm
guess someone who like bills for design services, but how do they like cross that bridge to start buying and selling the furniture and like getting into procurement?
Uh,
Um,
yeah, that needs some training and setup, and obviously in software, right? Because you want to make sure you're marking up right? You're making sure like you'll have a whole host of problems, and we are dealing with the exact same thing with another client where she's only selling time now, but she's planning to do it in 2026. So we have like preliminary meetings in November and December where we're going to walk her through the process. We're going to show her, obviously, without names, what it look like when she does something like that, the amount of work, the amount of follow-up, the expediting, right? You need to be mentally prepared for all that too, right? And also how to invoice, how to send out purchase orders, all that. So I don't think there's like a straightforward answer to that. I think it's more training and getting yourself ready to that stage.
Hmm. Yeah, it's a lot of work. You have to be very organized and think through things quite a bit. We've done a couple webinars in the past that have to do more with that side of things, like how to do like good procurement practices. So I put my email address in the chat and in the Q&A. It's FionaS@designspec.com. So if anybody wants me to send them links to those webinars, just shoot me an email and remind me like you were on Priya's talk and you want to get some additional info about getting into procurement. Okay, let's make sure we caught everything. This was really great. Thank you so much, Priya, for
You're
taking the
welcome.
time.
Thank you, Fiona, for having me.
Um, and yeah, I see someone would like the links. So yeah, just send me an email because I can't really see your email here on the Q&A. Shoot me an email and I'll make sure to get this to you. And then Priya has also generously offered to send everybody a link to her longer accounting presentation that she did for an ASID conference this year. So you should be able to download that from the follow-up email. Okay, well, thanks again, everybody, for joining, and
Thanks,
thanks especially
everybody.
to you, Priya.
Yeah.
So I hope you all have a great rest of your day.
Thank you, everybody.
Thank you.